In today's video, I'm going to talk about something very important, the only altcoins that you should be buying right now. Not only the only altcoins that you should be buying, but the only altcoins that you should be holding in this next period of the market, because I've boiled down hundreds of variables when it comes to altcoin investing to just one thing. The only altcoins that you should be buying or holding need to be following one very key principle that I'm going to break down in today's video. And I do believe it's one of the most impactful principles when it comes to crypto trading. If you can master this, you're going to be a much better trader and investor. I'm also going to get a little bit dirty in today's video. We're going to get our hands dirty, and I'm going to teach you how to actually spot some of the top performing altcoins for yourself. I've got a couple of strategies which I think are really going to help you out. And of course, based on that, I'm going to show you some of the outliers that I am currently seeing in the market. So strap in, subscribe to the channel if you do enjoy content like this. Remember, nothing in this video is financial advice. I'll leave a link in the description below to the full disclaimer. And without further ado, let's get straight into things here. So looking at Bitcoin, it's making a new all-time high. I don't want to talk too much about Bitcoin today because I do want to focus on the number one thing that you have to be looking for when it comes to buying and holding altcoins. However, I do want to touch on it just for a couple of minutes here to set the scene, especially if you didn't watch yesterday's video. I do recommend, though, after this video, you go and watch yesterday's walk and talk, because we did go through the current Bitcoin environment in a little bit more depth. But look, in terms of price action, things are looking really strong. You know, we tracked this downwards channel that we're in for a couple of months. We did break out. I did speak about a week ago that the major level that we needed to flip was 116K. We ended up flipping that level, and that's pretty clear if you go down to the H4. We had a slight retest of this upper bound here, and then we've just been climbing upwards. Had a couple of small dips along the way, but largely been climbing upwards to make a new Bitcoin all-time high. And if you look at the weekly chart, in my opinion, this does look really bullish, especially if you flick on the log chart just to compress things a little bit. It kind of gives you an idea of just how much upside there still is on Bitcoin. And we've been following this pattern on Bitcoin where we'll make a rally, we'll form a base, we'll make a rally, we'll form another base, we'll make a rally, we'll form a base. And now it seems like we are on this next expansionary leg to the upside. And something interesting about these bases that Bitcoin is forming is that the time spans are getting shorter. This was an extremely long move that lasted from February to September in 2024. Then the next one was half the length. Now the next consolidation was half the length of that. So the moves are getting more explosive and the moves are getting shorter. And this is typically an indicator that you are heading towards the, grand finale in terms of price action on Bitcoin. Now, the grand finale can take months to play out. It doesn't mean that, we necessarily have to put in a top in the next month or so, but we do have to be on high alert heading into the next, not only quarter, but then the quarter after that in terms of the signals that we're getting on Bitcoin. And for me, I'm mostly going to be tracking the 200 MA. Of course, you have the custom indicator, the Mars High Club, the money noodle, which I'm going to be using as our bull market support band, because as you can see on the weekly, we've been sticking to this the entire cycle. So as long as price action is above this level, and as long as we continue to make higher highs and higher lows, I don't think the top is in yet on Bitcoin. And as I discussed on yesterday's walk and talk, the great thing about this, even if you don't hold much Bitcoin, is that Bitcoin going into price discovery essentially resets the cycle and gives the market a much needed sentiment boost and a much needed liquidity boost to actually foster that next rotation from Bitcoin into Ethereum, then hopefully into Solana and altcoin. So that preps the right environment for altcoins, but then the second part is actually executing on your altcoin trades, and that's where today's video comes in, focusing on that number one thing that you need to know, and then the altcoins that come from this strategy that are actually going to outperform in the market, because we have a lot of dilution at the moment, as we've discussed in the past few weeks, and because the market is slightly different in terms of how the flow of funds is operating from Bitcoin and Ethereum and altcoins. You have to be selective now more than ever. You can't get away with those big bloated altcoin portfolios of yesteryear. You need to slightly tweak your strategy a little bit. Hopefully over the past couple of months through my content, you have been able to do that and make some good tweaks. But I think today should really wrap things up for you and give you like a comprehensive overview that you can utilize heading into this next period of the market, because there's really, as I mentioned, only one thing that matters right now. But quickly, let's finish on Bitcoin, because I just want to set the scene for where we're currently at. So we're seeing a very interesting macro policy shift at the moment. As Fiscal says, every country is now pivoting to running it hot. We're going to run as wide of deficits as possible and try to outgrow the debt. Obviously, fiscal debt in the US has been growing. You can see the outlays are now much bigger than the receipts. Even the net interest alone is almost as big as income taxes in terms of, its representation of GDP, which is absolutely crazy. And I think this trend has kind of left the Trump administration between a rock and a hard place. It's like, they kind of came in trying to reduce government spending with Doge and with the tariffs and, trying to actually raise more capital through tariffs. But now they're realizing, especially if the Supreme Court overturns the tariff ruling, that, look, maybe we're in a bit of trouble here, and maybe the only way out of this is to actually, print more money and, keep businesses hot by lowering rates and keeping easing going, and then hopefully we can try and get enough growth out of the tech sector, out of AI, and out of our business to potentially offset the amount of debt that we're accruing and the amount of damage that it's doing to the currency. But that's a very risky strategy. It's honestly kind of scary times from a macro perspective, depending on how you want to look at it. But this is the, predicament that we are currently facing. And if that is the case, and if that is the strategy, as Fijal's pointing out here, well, then one can only assert that equities, Bitcoin and gold probably still have a bit more upside to come as the currency keeps devaluing over time. I do want to hold my horses a little bit though when it comes to the whole, Bitcoin as an inflation hedge narrative. I still don't think we are fully there yet. I do believe firmly in the market that price leads narrative. And I think, a lot of people are now coming out of the woodwork and claiming that the only reason Bitcoin is going up is due to currency debasement and the fact that Bitcoin's an inflation hedge. But at the end of the day, Bitcoin is still very correlated to risk assets. So I still believe if you saw a rotation out of equities, you'd also see Bitcoin coming back down. And I don't think it's, fully foolproof digital gold just yet, or an alternative currency for that matter. I think that is still years off, but I do think it has proven to be a liquidity sponge. So I think as long as M2 keeps tracking to the upside, there are potential continued upside targets on Bitcoin. As Fijal here says, and by the way, he's a macro analyst that I really respect. He's been putting out amazing macro takes, commentary, and has read the market very well over the last year. That's why I'm referencing his tweets today, trying to always give you guys good information sources. He says, as you know, and you have well analyzed, a lot comes down to the fact that the Supreme Court is ruling on tariffs and whether they get denied. If it does, it's game on, and the run it hot path is clear. If not, I agree it's an interim issue. So basically saying here that if the tariffs are overturned, so blocked by the Supreme Court, this would basically force Trump into this strategy here of, all right, well, we can't even do tariffs to raise income, so we only have one choice, and that's basically to run it hot to try and make up the deficit that way, which is, as I said, a pretty crazy strategy, but it basically forces their hand. If the Supreme Court can't overturn Trump's tariffs, and there is a small chance, this article says 20%. I looked at Polymarket and some other prediction markets. They're saying it's closer to 40%. So there's a decent non-zero chance that, the tariffs do go ahead. I don't think that completely eradicates the bull thesis for Bitcoin, but I think it certainly makes things a little bit more unclear, and you're likely to see more muted returns in the event that does transpire. So I guess you've just got to keep your eye on it. We'll likely have an outcome by the end of the year. And I think that is a big narrative you've got to be following right now. I think a lot of people are talking about rate cuts, and data. Obviously, we're not getting data right now due to the government shutdown. But I think the main thing to keep your eye on is whether these tariffs go through. To summarize once again, if the tariffs go through and aren't overturned by the Supreme Court, I think that's more bearish for markets. If they are overturned by the Supreme Court, I think that is more bullish for markets, and I think that's going to be the number one thing that you need to be watching. Of course, something that you also need to be watching is the gold price, because gold has just been skyrocketing. It's almost at $4,000. And as David points out here, gold's gone up so much that for Bitcoin to be at parity, it needs to be $1 million per coin. Reprice that. And remember, before this was, I believe, around $500,000. So as gold goes up, I think the potential upward ceiling anchor for Bitcoin goes up. And this is something I've actually spoken about on the channel over the past couple of months, that gold is going up and up and up, and Bitcoin has actually been lagging gold on a relative basis. So gold going higher actually bodes well for Bitcoin. And I do believe the beginning of this move to new all-time high was Bitcoin repricing slightly, because it was essentially a coiled spring, underperforming. And we know when Bitcoin underperforms, typically it can go on to not only recalibrate, but then lead the next leg of the market. And that's what you are starting to see at the moment. And you can also assert this through looking at the Bitcoin price versus global M2, which has started to make a bit of a comeback, but the M2 index is still much higher. And typically, and especially since 2023, Bitcoin has tracked this pretty much to a T. So although I think this is a bit of a meme in terms of, the exact price performance, like it doesn't have to follow exactly, I do think if the general M2 trend is up, the general trend for Bitcoin will also be up due to its correlation to global liquidity. And the correlation coefficient over a longer time frame of global M2 versus Bitcoin is over 0.9, which means it's extremely correlated. You can also see gold and Bitcoin's price performance has also been extremely correlated since 2020. And once again, sometimes these charts are misleading because based on the time frames, they'll drag them up to line up. But what I think is a little bit more important here is that you can see the actual reaction of the market and how events spur similar outcomes. Typically what we see is gold actually leads and then Bitcoin follows after. So we actually saw that in 2022, saw it in 2023, and we're seeing it again now. Gold's actually leading. And I know it oscillates, like sometimes Bitcoin does lead, but typically one or the other will catch up. And that was, one of the big points behind my thesis as to why I thought we'd see a new Bitcoin high that I've been speaking about over the past month or so. And then this is also combined with the fact that this is a pretty quiet all-time high. I'm not hearing much discourse about it on YouTube, on X, and the Google search volume also represents this. And I do think this is largely down to the fact that simply most people don't really hold that much Bitcoin. And look, although my gut feel is to be like confused by that. Like, if you're in crypto and you don't hold Bitcoin, like that's confusing. But then I actually started to think about it a bit more, and I think it makes complete sense actually. The more I thought about it, like, most people aren't in a position where they can get meaningful returns out of Bitcoin. If they have a $1,000 portfolio and they put $1,000, even if Bitcoin went to 300,000, they can only turn their 1,000 into 2,000. And the reason most people are interested in altcoins is because it gives you a genuine chance, not a guarantee, but a chance to turn $1,000 into potentially more. Of course, that comes with its own risks, and we'll speak about that later in the video in terms of tracking your portfolio versus Bitcoin. But, it's not hard to see why a lot of people in the space don't hold Bitcoin. But what I will say today is that even if you are in altcoins and don't hold any Bitcoin, I really think you've got to think of both of them as different assets. And I've actually said on the channel for a long time, years in fact, even when I was at Banter, that you should be viewing Bitcoin differently in your portfolio and potentially even excluding Bitcoin from your portfolio. Like, I actually don't track Bitcoin on my portfolio spreadsheet. It's a completely different asset in completely different wallets, and I view it completely differently. I view altcoins as my crypto portfolio and stablecoins relative to altcoins, and that will include Ethereum and Solana, Ethereum obviously being the leader of the alts. And then I view altcoins as a way to make more Bitcoin, and I view Bitcoin as more of an alternative to gold and currency in my portfolio. So when I'm tracking my Bitcoin weightings, I'm actually tracking it alongside my FX and gold weightings, and I'm not really tracking it alongside my crypto weightings. Of course, it's semantics a little bit, whether you put it under crypto or not, but that just goes to show how I actually think of Bitcoin. Bitcoin for me is my long-term play to keep up with inflation, and my long-term play, essentially like a life raft in order to diversify against currency debasement. And then altcoins for me are a way to make more capital, and some of that capital goes back into Bitcoin. If you want to know into my thoughts on whether you should buy Bitcoin now, I gave a bigger answer in yesterday's video. So after this video, go and watch that video because I don't want to repeat myself too much for the regular viewers of the channel. But I answered that question in more depth in yesterday's video. But now I want to pivot to altcoins. So there is one driver that I think you have to be very aware of if you're going to be trading and buying altcoins in order to outperform Bitcoin, as we mentioned before, over Q4 to Q1 and potentially longer. We never know when the cycle is going to end. I'm just tracking things as it goes. But there's one thing that you really have to have in the back of your mind. I'm going to read this tweet from Kyle, but to summarize, that number one thing is flows. So I think everyone is obsessed with narrative, and I get it because narrative and fundamentals are, popular buzzwords. Oh, this token has strong fundamentals, so it must go up. Oh, this token has a strong narrative, so it must go up. But the reality is the only thing that drives price action in crypto are flows. To say it simply, does the token have more liquidity flowing into it versus liquidity going out of it? AKA, are there more net buyers than net sellers? Now, I know this sounds simple at face value, but what I'm going to do today is I'm actually going to show you how you can track flows to make sure that you are A, only investing in the altcoins that have positive flows, and B, can actually spot new altcoin opportunities based on flows. Because it's no secret that the strongest outperformers over the past few months have been the ones with strong flows. BNB has been an amazing outperformer. Why is BNB being an amazing outperformer? Because Binance is actively pushing the token and adding buy pressure, and the whales on Binance need to interact with BNB to get VIP status, and they have a very strong flywheel on the exchange. CZ has engineered the flows for it to go up, and there aren't VC unlocks, dumping on your head, which is contributing negatively to the flows. If you want to look at other tokens that have performed well in the market, like MNT is a great example. That's one that I actually bought at 60 cents. This is over $2 now. The reason why MNT has been performing so well is because it has positive flows. Not only the speculative demand that's coming off the back of some of the announcements that they've made, but also the fact that they've tangibly impacted the utility of MNT on the Bybit exchange, which is now allowing you and enabling you to use MNT in different ways. And it's actually a prerequisite to, get certain VIP statuses and, trading discounts. So they've basically replicated the BNB model. And if you look at other exchange tokens, that's why BGB has done so well. Hyperliquid is another example of this. It had positive flows from not only retail funds, but, there's also huge incentives to hold the Hyperliquid token, stake the token. And we didn't see because flows are, two-pronged. There's demand, which we're discussing now, but then there's also the sell aspect. And because there was no huge VCs in the token, after the initial airdrop was flushed out, there weren't many sellers. And it was similar with ASTER because they didn't do a massive airdrop, and because there weren't, heaps of VCs crowded in the coin, and because a lot of the supply was actually cornered because CZ owns so much of the supply, the circulating supply was much lower than people thought. So then when that demand side started to kick in, the token went much higher than people thought. And that was one of the things that substantiated my ASTER trade. So to summarize, flows in the market are the most important thing for you to understand. If you are sitting with altcoins right now and you're wondering, why isn't this altcoin going up? The answer is quite simple. It's because there's no liquidity flow into that token. Or if there is liquidity flow into that token, there is liquidity outflow or net sellers, which are causing that token to go down in price. And then obviously you can go a step further from that and start to look at some of the reasons why there are no flows. Because obviously there are narrative components on the demand side which impact flows, and there are also, tangible components like the tokenomics and unlocks which can impact negative flows. But I want to read out Kyle's tweet, and then what we're going to do is I'm going to go through some ways that you can track flows, and then we're going to get into the exact altcoins that I think are exhibiting strong flows, and therein lies the opportunity in terms of portfolio positioning for Q4. So as Kyle points out here, all philosophies are a downstream of that. New coin, good. Old coin bad, because it's all flavor of the week. The latest flavor gets all the flows. Recency bias wins. I actually discussed this in yesterday's video. Once again, I recommend you go and watch it if you didn't already, because I talked about the fact that the reason why a lot of the new launches are performing better and why a lot of the old launches and old coins are performing worse is because there's a lot of underwater sell pressure contributing negatively to flows on other coins, because as coins head upwards in price, they reach psychological points where people break even. And then there's also net sell pressure coming from perps at certain levels that are predetermined on the chart that you simply don't have on newer tokens. And newer narratives create new interest and new flows for people to jump on board the train, which we saw with ASTER. We started to see it a little bit with XPL in the early days, but that's another good example to use. The reason why the XPL trade didn't have continuation is because we started to see a lot of unlocks hitting the token. So that actually prompted me, as I said yesterday, to slow down my DCAs a little bit because I noticed that there was too much outflow. It started to recover a bit now, so my initial DCAs are closer to break even, but I'm not adding more until I see positive flow. Something you can do, very simply, and one way to track flows without going too into the technicals, which we'll also go through in today's video, is just to track price action. Like if a token is making higher lows and higher highs and looks pretty constructive on the chart and looks good, and every time there's a dip, there's strong support, that's a good sign that the flows are positive. So a lot of the time, price action is going to tell the story. And I guess that's where the argument for TA comes in, and that's why TA for a lot of people, works really well, because you're actually able to track momentum and flows just through looking at a chart. Personally, I'm a big fan of combining fundamentals, so having an understanding of why there's net inflows or why there's net outflows, why there could be potential buying pressure in the future, understanding whether there's asymmetries, and then using the chart in order to back up that thesis. And even if I have a fundamental thesis like I did on Plasma, and then the chart isn't backing that up, then that could be an invalidation or a validation for you. You might have a thesis that there's going to be a lot of sell pressure once the token launches, and then it launches and there actually isn't a lot of sell pressure, and then that can invalidate your bearish thesis. So I think using technicals and fundamentals in tandem is the best strategy in the market. And that's why if you've been following my content for many years, you'll notice that I've gotten more and more into TA. And you guys know I don't use crazy TA, but basically what I've learned to do is just identify market structure. I've put a lot of work into just being able to identify where the trend is. And I use basic indicators, money noodle, RSI, support, resistance in order to do this across the timeframes that I find most effective on the coin. Just that basic understanding of technical analysis is going to help you a lot, even if you're a fundamental investor. So I would recommend, even if you're fundamentally investing or narrative trading or news trading, you still have some sort of semblance of how to at least chart coins, and because that will significantly help with your risk management in the market. Going on in Carl's tweet here, he says, plus VE flows mean net buying pressure, lockup sinks, minus VE flows equals selling pressure and emissions. So ultimately, flows come down to this calculation. You need net buying pressure, so demand for the token. You need lockups for the token, which reduce circulating supply like we saw on ASTER, and sinks, so people staking the token, for example, BNB, or burning the token, for example, Solana or Ethereum. And that side of things has to outweigh the negative flows, which are selling pressure. So this can be VC unlocks, this can be underwater bag holders, this can be net selling pressure coming from perp shorters, which is, I think, a bit more prominent on the older coins. But obviously, as even a new coin or any coin, as it starts to reach overvalued territory, you start to see net perp sell pressure come in, and also emissions. These are more sell side things. And a lot of this is public information, like Grok I love. You can see Super Grok on the left-hand side of my screen here. I'm going to show you a few very good things that I do on Grok to research tokens when I'm researching, but oftentimes Grok can source tokenomics for you, and then you can use that information to double-check on token unlocks, double-check on the white papers, double-check on another website, obviously just to verify the info is correct, but it can speed up the process because it also links primary and secondary sources for you. As Carl says, as such, today want coins to go up, but constant selling means coins go down, emissions, whatever. Most sinks don't work. No one wants to lock their tokens up. Thus, tokens have a natural tendency to go down. And this should be your base case in crypto. Your base case is that altcoins are going to be default going down over time. I know this sounds controversial, but it's really just based on the current state of the market. The base case is for tokens to go down because the base case is that a bunch of new tokens are always going to be launching. So if the aggregate amount of tokens, not dollar value, but tokens in the market increases and there aren't enough net inflows coming in to actually offset that, then you end up with a scenario where tokens go down, but the overall total market cap might be going up. That's why I think tracking total 3 can be a bit of a meme, because you will see total 3 going up and you might even see it going to new highs, but your portfolio could actually be down, even though total 3 is at new highs, because that includes like all the new launches that have come, like Plasma, like ASTER, like some of the new ones that are going to come. I think MetaMask doing a token, Linear recently launched a token. Like all of these tokens are going to inflate the index of the market, and that's not even including the inflationary effect that net new stablecoin issuance has on the market as well, with all these new stablecoin protocols and with new stablecoin interest. So I think tracking total 3 actually can be a bit of a meme. The chart that I much prefer to track in order to get an idea of the current state of altcoins, and I'll show it to you right now, is actually the Others BTC chart, because the Others BTC chart actually shows you the altcoin performance excluding the top 10, so that excludes stablecoin, versus Bitcoin. So now it's on a relative basis instead of looking at an aggregate chart. I'll show you total 3 right now, which keeps going up. Like, see how unreflective this is? Like, okay, this looks super bullish, right? And I could definitely use this to bull post. And admittedly, sometimes I do an X because, it gets good engagement and people seem to like it. But ultimately, I mean, this doesn't tell us that much. All it really tells us is that the overall market cap in crypto is increasing, but you can't really act on that because individual altcoins could be going down. It's just new launches propping up the valuation of the market. And obviously with everyone investing in stablecoins, like even the Trump family with USD1, that's going to be included in this index, by the way, because it's total 3, not others. It's including all the stablecoins in the market, whether it be US. I don't know if USDT is technically ranked 3rd now. I'll actually find that out for you here. Yeah, it's including USDT because it's ranked 4. So it's only excluding Bitcoin, ETH, XRP. It's including USDT. It's including USDC. It's including, staked ETH. It's including USD1. So the index is totally skewed. So at the end of the day, all you should be looking for on altcoins is this equation here in terms of flows to determine whether that altcoin is bullish or bearish. And to go a step further, you should also be tracking it versus Bitcoin, because if you can't outperform Bitcoin in this market, then the better risk-adjusted return profile would just be to long Bitcoin. So I truly believe, like, if you are underperforming Bitcoin and if you don't think you can outperform Bitcoin with altcoins, then it's probably better just to long Bitcoin, because otherwise you are taking on more risk, because investing in altcoins is riskier. So you're taking on more risk to get even or subpar returns. I mean, there's even an argument to make that even if you outperformed Bitcoin by 20% using altcoins, it still probably wasn't worth it due to the amount of risk, based on your trading style, of course, that it took to get those extra returns. You know, you could have been in Bitcoin, it would have taken less energy because you just invest in Bitcoin and wait, and then, you know, you could invest your mental energy in other areas of the market. So that's why I think ultimately it's better to denominate your portfolio in Bitcoin than USD, or at least have both denominations. Like, something I recently did is on my net worth or crypto portfolio spreadsheet, I actually added a column to track my net worth in Bitcoin. And to be completely honest with you, even me, when I read this spreadsheet, I was like pretty underwhelmed with my performance, because I saw like the graph of my stable coins going up. I was like, yeah, I'm getting richer, I'm making lots of money. But then when I was tracking it in Bitcoin, yeah, it was going up, but it was like much more muted, and it was performing, I think, worse than I thought on a risk-adjusted basis. Not on a nominal basis. On a nominal basis, I've made money, but on a risk-adjusted basis, I don't think the returns are as impressive compared to people that could just put money in Bitcoin and chill and still make, you know, pretty good returns. So I think it's very important to be tracking your portfolio versus Bitcoin. And not just that, you know, track your individual trades versus Bitcoin. So if you're going to long the coin, yes, look at the USD chart, because obviously everyone else is looking at it. But then also track that alongside the BTC pair, because if you're longing an altcoin that's in an uptrend versus USDT, but in a downtrend versus Bitcoin, well, it's only ticking one of the boxes. You actually want it to tick two of the boxes, and ideally all three of the boxes, which is also giving you an entry versus Ethereum as well, because that's going to be a very important thing to track, especially as we see this next rotation after Bitcoin puts in its next high, you know, and it goes back into Ethereum. And I think before I go into actually how you can spot flows and then the exact altcoins that are exhibiting strong flows, I will give you that in today's video. I'm just trying to educate and get the mental framework going for you guys here. I also think a framework that's going to help you a lot is thinking about your investments as trades, not investments. Now, I know that sounds counterintuitive at first, because it's like, well, you know, I'm investing in Solana. You know, I'm not trading Solana. I'm just buying it and I'm holding it. That's fair enough. But the reality is every single position is just a trade. Even a Bitcoin investment is a trade. Let's say you're holding Bitcoin for 10 years. That's effectively just a trade that Bitcoin will outperform the US dollar over 10 years. Or if you're longing Solana because you think it's going to outperform over the next 3 months, that's not really a Solana investment. Of course, it's semantics, but in terms of my mental framework, really you're just trading Solana versus the US dollar over a 3-month time horizon. So I think it's a very small mental adjustment, but just thinking about altcoins as trades actually helps, because if you think of everything as an investment, it can become a bit of a cop-out, because when the market's down, you can get complacent and be like, I'm not doing anything because, you know, my assets are fine, they're investments. Or, I'm underperforming, but, you know, it's fine, it'll turn around, they're investments. But if you think about them as trades, then you start to reframe a little bit differently, and naturally that's forcing you to think a bit more about risk, reward, and opportunity cost. And once you start thinking about that, then you will start actively doing things like, you know, setting invalidations, setting take profit orders, tracking it versus other coins and scrutinizing whether the opportunity cost is too great to be in that position versus another position. So you really eliminate bag holder bias by viewing everything as a trade rather than an investment. What this will also do is naturally skew you towards holding less altcoins, because you probably don't want to be in 20 trades as once. It's very easy to be in 20 investments, because they don't take any work. Oh, I'm just an investor, I'm in 20 investments. But if you're in 20 trades, well, all those trades require active management. And the reality is every single altcoin position, in my opinion, unless it's literally just a spray and pray moonshot that you don't care about, if you have meaningful money in altcoins, every single position you need to be tracking. You need to have it on TradingView. You need to have your invalidation. You need to be looking at the news. One tip I want to give you is actually have an X list, and you can use X Pro for this even if you want a full dashboard view of it, and have all the tokens you're invested in, follow every single one of them on X so you actually see the new announcements before everyone else, and follow the top creators. Let's say you're invested in Solana, follow the top analytics research firms and creators that are publishing content about Solana. This will ensure that you're constantly in the know and aren't missing anything super crucial that may actually alter your thesis. So we've talked about flows and I've talked about my mental framework around altcoins, but now let's talk about how to actually spot flows. I'll run through this pretty fast for you guys, but I want to give you a few platforms you can use. Some are free versions, some are paid, but that can be at your discretion based on your resources. I genuinely think Arkham and Nansen, which are two of the websites I'm going to mention, I genuinely think their paid versions are worth it, but you can test out the free version to see if you actually use it before you upgrade to paid, for example. And I'm not sponsored. I don't have an affiliate link for them. I probably should speak to them and see if I can get you guys a discount. We're working on that for Mars High Club members, but until then, here's the strategy. So Arkham is a great one because they actually have a lot of the smart wallets tagged and they have a lot of the top VCs tagged. And this is only one aspect of flows, but definitely one aspect of flows that's very important are being able to establish net buying pressure. Now, net buying pressure, you're going to see on the chart a lot of the time, but a lot of the time this is created by narrative of big players being involved and also the tangibility that comes with big players, actually positioning and actively buying in the market. And being able to track flows on Arkham, and you could search up individual tokens for this, like ASTER, Ethereum, you could see which big players are positioning in these coins. And I think this is a very powerful thing to actually track. And you can come up with, custom watch lists. So what you can do on Arkham is you can actually create a custom watch list of the top funds that you want to track, and you can see where they're positioning. I think this is a very cool thing that you can do, and my researchers use Arkham a lot in order to actually spot flows. You can see here, there's an example of this wallet here. They started buying a lot of WorldCoin, and this was actually before the DAT announcement. So when there's where there's smoke, there's fire, and if you see wallets doing stuff like this, you can dive deeper and see if there's any murmurs of something. And a few days later, WorldCoin absolutely exploded. So that was a trade that ended up being quite profitable, because if you are able to spot, and I didn't personally take this trade, I'm just using it as an anecdote, if you are able to spot this kind of weird activity going on and the flows, because this whole video is about flows, for WorldCoin starting to increase, you would have seen it in the early days on the chart, but you would have also seen it in terms of the smart money, and then it ended up exploding. So a lot of the time where there's smoke, there's fire, and even ASTER, there was some very interesting stuff happening in terms of big wallets and even hyperliquid whales starting to accumulate even before CZ tweeted. So Arkham's one website. Another website, which also has a paid section, which I'm personally subscribed to, but you can do this at your own discretion, is Nansen. I almost said Ansem. What you can do on Nansen that I really like is track their smart money and also track their wallet profilers. So you can actually search different wallets for different profiles, so you can see which wallets are accumulating certain tokens. This gives you an idea as to whether smart money is a net buyer or a net seller of a coin. So what I'll often do is I'll look at narrative first, because you need a research flow that actually makes this easy for you, or you're just going to get lost in a bunch of noise. If I'm looking into an ecosystem, so I'll start with narrative. I'll be like, okay, the Binance BSC ecosystem is super hot. That's the narrative. These are the top tokens. Then I'll go into Nansen, I'll enter the tokens, and I will see whether smart money is accumulating, and I'll see whether whale wallets are accumulating, or if they're selling. Because if they're net selling, that's an indicator to me the trade's over. But if the big whales, and I think this is one of the biggest tips of this whole video, if the big whales are buying and the narrative aligns, that is a strong sign that there's still upside. And if the whales are still actively buying, that means that the general consensus is that the trade is not over. If you're buying into whales selling, and obviously it's net selling versus net buying, because there'll always be someone buying, then that is a bit of a red flag. Another thing you can do, and this is just very basic, but this just gives you an idea of where to look, because as I said, you need to know where to look in order to try and work out where the flows are, is you can go into Dex Screener or Dex Tools. I like Dex Screener, and you can look at the top tokens, and you can see where the top gainers are, and you can obviously see over the last 24 hours, BSC, there are a couple on Ethereum, but mostly a BSC, which are outperforming. So that is a big indicator that right now, the big movers in the market, so where you should be focusing your attention, is on the BSC ecosystem, because that is what's currently exhibiting positive flows, because you always want to go where liquidity is flowing. And you can also use mindshare data. So something I'll do is I'll go into Cookie and I'll look at which protocols are gaining the most mindshare, because sometimes there are discrepancies where sentiment for a coin and discussions about a coin will be actively increasing, but the price hasn't caught up. So you can also use the sentiment screener on Cookie to spot a coin, and then you can go into Arkham, go into Nansen, or dig through the on-chain yourself to try and find discrepancies. And this is also very good for pre-TGE projects to work out things that are potentially worth farming and potentially worth tracking if there are any beta plays prior to TGE, because a lot of the time there could be a token that's super popular and is gaining a lot of mind share, but it's not tradable. That could potentially be an opportunity for you in the market as well. And I said before I was going to give you a bit of like a cheat sheet on Grok. Grok 4 is very good, especially Super Grok for crypto if you can afford it. What it can do is it can actually generate clean tables for you using relatively accurate, you will need to double check them, but relatively I find, live information to help you get a quick pulse on not just the market, but on an individual token. So look, admittedly, if you press it too hard on a low cap, it won't be able to get the data, but especially on the bigger tokens, it'll be able to get you the important data when it comes to organizing your thesis around flows. So if you're trying to work out whether there are lockups, you can actually ask Grok, hey, when are the lockups on these tokens? What's the net buying? Where's the net buying pressure coming from? But most importantly, where's the selling pressure coming from? Are there big unlocks? When's the next unlock? And then you can verify that data on token unlocks. So utilizing Grok as a research tool, I still think it's the best one for crypto, in my opinion, out of all the AI models. And look, the more you test it and the more you play around with it and the more you experiment with it, the more you're going to learn what it's actually capable of, and you can push the boundary there. So now we've looked into some of the ways you can spot flows and the general concept around spotting flows. What does have strong flows right now? Well, it's very clear the number one thing with strong flows is the BSC ecosystem. A lot of the top gainers right now are on BSC. Base also has decent flows. So I think Base, Ethereum as well, Solana is always on the list, but BSC is clearly the major outlier right now. So if you're tracking anything, it's going to be the BSC plays. My research, and I'm really mad, over the weekend, I was focusing on other stuff. Of course, the one day that I'm focusing on other stuff, my research actually hit a 5x on a low cap BSC coin. So I definitely think this is the playground to be focusing on. I know it's what a lot of my team's focusing on. We're in a bunch of smaller Telegram groups and alpha circles. So I am going to post a couple low caps in my Discord. I actually started a new channel called Risky Plays. This isn't stuff you should ape into, by the way. You can see the disclaimer here. It's high risk stuff, but I still want to be able to have a place to share some of this high risk stuff with you guys. So if you are in the Mars High Club, we're going to be sharing this week some of the plays that I'm looking into on BSC. Look, these rotations don't typically last that long, but I could definitely see this having legs for at least a few weeks to around a month, just based on the current price action and based on the fact CZ right now seems to be the main character in the market. So this is the place where I'll be sharing some of the really low cap stuff. My YouTube audience, in my opinion, is too big. And, Mars High Club is, a much smaller community. So that's where I'm more comfortable sharing this stuff. So if you do want to join, I'll leave a link in the description below. You can see Fabian also a few days ago posted about Cake, which is one of the leading decks and one of the leading plays in the BSC eco. Since then, it's actually performed really well. It's going up nicely. It's at $3.75. So he was spot on with this narrative, but I think this one still potentially has some upside just as the leader of the ecosystem. I think BNB, because it has positive flows, balance of probabilities is it keeps going up, but I think the Cake thesis is a little bit more compelling, especially if this season keeps heating up. Then obviously the major beneficiary is going to be the DEXs, right? But if you're going to position, obviously do so on major dips and have some sort of invalidation, because remember, with flows can change quick. So just as you want to position quickly, you also want to unposition quickly if the thesis goes against you and if positive flows turn into negative flows. So whatever your validation is for a coin, you want to have an equal and opposite invalidation. So if the reason you entered is threatened, that's an invalidation in itself. And I recommend, when you actually enter a position or beforehand, you actually write down this stuff. So yeah, Fabian's channel is great because it's keeping us up to date with a few of the top plays, and he updates his whole portfolio in there. So if you want access to the Mars High Club, link in the description as usual. And I just wanted to reflect on this watch list from Alex Wasey and then do a little bit of charting on some of these coins, because a lot of these are exhibiting strong flows in my opinion. So ASTER's the first one. ASTER, I think, still has upside. I actually literally charted this an hour ago before I recorded, and it's just exploded past my breakout level. So that would have actually been a decent trade. Look, I'm still holding 10 to 20% of my bag. I haven't re-entered. I'm interested in re-entering. I do like the fact that it had a flush and then got a response. If we get a response from here and then a pullback into the $2 region, I would consider potentially another position, because I still think balance of probabilities in terms of a large cap, this is one where I think risk reward is to the upside and does have a strong trend against Bitcoin. So even at the current valuation, I still think, you're better off in a coin like Apex than a lot of the rest of the market, which doesn't have strong flows. Sorry, ASTER, not Apex. The next one's Apex. This is another one that I positioned in. I think I shared this in the Discord at like $1.60. It's up to $2.13 now. I continue to hold this one. My invalidation will be if we start closing below this level. You can see this is a massive demand zone that we want to see hold at 180 to 190. Many different candle reactions there. So if we broke below, I'd look at invalidating, and obviously I'd be up on my entry. So that would be a small profit margin, but ideally we go to prior highs and we keep going higher. This is, once again, it's the flows argument of not only having narrative and attention flow, but also the potential for buybacks in the Bybit ecosystem. I will say though, I think the ASTER trade is more compelling, but the reason I'm in Apex more heavily than ASTER now is just because it has a lower valuation and there's more upside because that trade is a little bit less saturated in my opinion. And then going on with Alex Wasey's list, I think Solana's a comfortable hold right now. We're going to get ETF news very soon, I think. In the coming days. MNT, I'm still bullish on this, still holding a pretty decent bag, one of my biggest altcoin holdings, and keeps outperforming, so very happy with that one. S is interesting, definitely one to track. I'm not going to buy a huge bag and sit on it again, but what I will be doing is trading it. So if there are any entries, I think there's an interesting short to midterm setup here with the Flying Tulip ICO. Sky, honestly don't know much about it, so I won't comment. PENDLE and XPL, I like PENDLE because it's shown resilience over a long period of time, and this partnership could bode well for them. In terms of XPL specifically, as I mentioned before, this is one where I want to see the price action just return to consistent positivity after kind of chopping for a while. And then finally, Stable Protocol, they're entering their launch phase. This is one that I think is an interesting play, but you want to see it reclaim its key level at, I think, 30 cents. You can see it's in a downtrend. For me, this indicates that there's sell pressure. So once again, going back to flows, a lot of the chart is going to tell you the story. And then obviously, if I wanted to unpack this more, I could go on chain and actually look at what's happening. Obviously, not everything's on chain. The stuff on centralized exchanges isn't transparent, but obviously looking at the price action overall can give you a general idea of what's happening. And then another thing to be aware of are DATs. I think DATs are actually one of the primary reasons and one of the primary causes of positive flows in the market. This is something, I can't find it because it's a very long post from Carl, very good post, but long, where he highlights DATs, being one of the new mechanisms for ensuring positive flows. And one of the bets I'm taking on a DAT is Aether. Their DAT is launching soon. I took a new liquid position, not dissimilar to this price, about a week ago. It's been a bit of a bumpy hold, but we're around the break-even level, maybe veering into slight profits now. I'm going to hold this one on the bet, and I'm willing to cut pretty quick if this starts to exhibit negative price action, but I'm betting that the buybacks are going to start and catch people off guard due to the low-ish market cap and circulating supply. That could potentially go against me, but I'm taking the bet, and I have to take some bets in the market where I think there's a slight asymmetry. Another area that I just want to put on your radar that is very interesting, and we're going to talk about in a future video because it's getting way too long now, frankly, but hopefully you enjoyed the alpha today, is ICM. But not just ICM, I think capital markets in general. So real businesses that are coming into crypto and are bringing revenue, I think that's a big narrative. Why? Because we've been discussing in this whole video, the whole thing about net inflows versus outflows. Capital markets, where you have a product generating revenue, is the definition of positive flows if you do have some sort of buyback mechanism. So that's why a lot of the stuff, not specifically on Launchcoin or Soar, which is a new one. It's not, obviously they can be on those platforms, but it's not specific to them. Just in general, companies coming into crypto and bootstrapping their marketing, liquidity, and distribution with a token, that is a very interesting trend for me. And I think you're going to see a lot of strong performers in that trend. So ICM or, internet capital markets, whatever you want to call it, that is a vertical that I would keep actively looking into because I think there are definitely asymmetries to catch there. So I'm going to dive deeper into some of this stuff later in the week. It's a longer video because I needed to establish the concept of flows and actually teach you guys how to think about this stuff and how to frame this stuff. But later in the week, we'll get into more specific altcoin stuff and obviously talk about some tokens individually. I'm having Paradise on the channel on Wednesdays, so make sure you subscribe because we're going to grab a bunch of tokens that I like narrative-wise, and we're going to see whether the chart actually aligns to those narratives. And I think that's a good thing to do because, as I discussed earlier, not only having a fundamental idea of a token, but a technical structure for trading that token, I think is very important. Link to the Mars High Club if you want to join. I'm going to drop some of these Binance plays as they come across my desk from my research team this week. And I will see you in the next video. Have a lovely rest of your day as usual. Peace out.